What's going on, everybody? We're going to do a video here about the process that is taught at MIC. So there's a lot of members that are getting overwhelmed by the amount of content that we put out because I mean, even if I were a new member, I would be pretty overwhelmed too. There's quite a bit. So I'm going to summarize the process that Bao teaches and has taught all of us to be able to use in our own trading and help simplify things for you. So above all that we teach is having a proper process is the most important thing. Not having A+ setups or anything like that, being able to figure out which setup is more ideal than the other, that comes down to a process, not a setup per se, if that makes any sense. So I'm just going to walk you through a simple process, okay, that you need to do every time you see a ticker pop up on your scanner that meets the criteria of something that's gapping enough. Usually, we like to see something that's gapping like more than 30%. That's usually when there's enough meat on the bone. Basically, if there is something that has $1 worth of range, it's from the previous close to the high is $1, right? It's currently trading like 20 cents off the high, or maybe it's extended $1, whatever it is. We want to be able to make at least, 20 to 30 cents a share. So how easy would that be to make 20 or 30 cents a share on $1 worth of range? It would be pretty easy per se. It's going to be a lot more difficult when the stock is literally only up 20 or 30 cents and you're trying to squeeze the entire range out of the stock. So that is what we mean by enough meat on the bone. So first off, when the stock gaps, you want some range on the stock. That gives it momentum, right? The first thing that happens is share structure, okay? Most people use FinViz to do this, and this is the benefit that you can use. This is what you can use to your advantage, okay? This is another part of psychology. First, let's say we take PRPO. It's the most recent little runner with volume. And when we see PRPO starting to run, whether we're long biased or short biased, the process is the same, okay? The process is, number one, we jump to FinViz because this is what everyone looks at, okay? The market cap of the company, it's the first thing we look at. It's a $19 million company. And we take note of this. Okay, that is definitely a small cap company. That is definitely a piece of crap company. They are not worth very much money. That may seem like a lot of money to you, but in the world of stocks, that is not a lot of money. Their shares outstanding are roughly 7 million. The float is roughly 5.92 million. I'm going to talk about this a little bit more in depth. The institutional ownership, we like to see lower institutional ownership. The lower the institutional ownership, the easier it is to have momentum, retail momentum. The higher the institutional ownership, the more difficult it becomes, the more controlled the price becomes. As a long, it's difficult to know if a dump is coming. As a short, it's difficult to know if you're just going to get grinded to death. So either way, it's very difficult to trade them without volatility, and usually on highly institutionally owned stocks, something greater than about 40%, it's going to get really, really tough to trade it, okay? Short float percentage, the lower it is, the less odds of squeeze. So if you're a long, you're going to want a short float percentage higher than maybe like 10% to at least have potential to be a squeezer. So shorts, we're going to want to see something under 10, ideally under 20. But now that we have these little share structure ideas, we're going to go down, we're going to verify that there's a catalyst. On day one, this would be September 26th. This would be the day that it runs. Here's the news. It's got a catalyst, clinical validations for IV cell Hema. I don't know what that says. We just want to verify it has a catalyst. The reason why we want to verify it has a catalyst is because if you're going long and there is no catalyst and the stock is up 50, 80, 100%, SEC could come in and halt the stock, requesting more information, and they'll request, why is your stock price up? The company could respond, I don't know. The stock has been halted this whole time. And then all of a sudden the stock reopens and boom, there goes your position. It's almost the equivalent of an offering as a long. That is why you just want a catalyst. That's it. You need a reason for the stock to be up. That way it can go without being questioned. So as a short, we want to actually kind of know what the news is. Long as you can read into the news and see if it's great. But trust me when I tell you this, 9 out of 10 PRs, maybe even 19 out of 20, the news is total crap. The news means nothing. Okay? Your job here is not to decipher the news. It's not to understand the news is the reason why they put out the PR is to push the price. That's generally why companies, small cap companies, release press releases. Okay, that's just the nature of these turds. So understand that the things that they say hardly hold any meaning, and they always have an agenda. So you're going to want to verify several things first. Okay, first thing being, after we have this information, we go to BAMSEC. That's the family favorite here lately. PRPO is what we type in. And if you look at this, straight out of the gate, it says right here, has a recent S1. If you do not know what an S1 is, write this down right now to go watch Chicago's Fundamental Series, okay? He discusses all things fundamental to be able to understand what these companies do and how that they screw investors every day and the things to look out for if you're a long trader, okay? So, has a recent S1. That means it has a recent shelf registration, okay? Let me just give you a picture here real quick. We got a PR, okay? First thing I'm going to do is go to the most recent 10Q and I'm going to verify the shares outstanding. Shares outstanding are 6 million as of August 6th, okay? Now remember, FinViz, what did they say the shares outstanding were? 7 million, okay? What's the difference there? Why is there a difference? So, there's an offering that was done on August 21st, right here. Okay, between August 6th and November, wow, what month am I in? September 26th, there was an offering right here, 424B. That's an offering. That's a prospectus. I can't say it. So, you also need to read these shelf registrations because there will sometimes be an explanatory note that shows you that sometimes there are two parts to the shelf. There is a sales agreement and then there is the shelf registration itself. This particular shelf registration has to do with a purchase agreement between Lincoln Park Capital and PRPO or Presidio. They registered 1.8 million shares to be sold. Okay, this is the things you need to focus on. Okay, the prices at which Lincoln Park may sell the shares will be determined by the prevailing market price for shares or in negotiated transactions. Okay, you can also scroll down and click the offering right here. It'll go a little bit more in detail. Okay. So, as of August 6th, there's the same shares outstanding. If they dump all of this offering, the shares outstanding is going to be 7.8 million. Now, use of proceeds. The prospectus of the stock, look, we will receive no proceeds from the sale of shares by Lincoln Park Capital in this offering. We may receive up to $10 million in gross proceeds under the purchase agreement from any sales we make to Lincoln Park. Okay, we've previously received $4 million in prior sales of 1.4 million shares under the purchase agreement. So that means that they have 5.9 million of gross proceeds left and roughly 400,000 shares left of 1.8 million. So there is dilution here, okay? So as a long trader, that's an immediate red flag, all right? Next part, as of August 6th, right here, this phrase right here, as of August 6th, there were 6 million shares outstanding, of which 5.9 million shares were held by non-affiliates. That is your float as of August 6th. Now remember, they just told you they dumped 1.4 million shares into the market. So you got to go down here and you got to do basic math. 5954,729 plus what they dumped. The real float is 7.3 million, roughly 7.4 million shares, okay? The reason you want to do that is because guess what? Finviz still thinks the float's 5.92 million. It still thinks that the float is what they told us right here, which is 5.954. But the actual float after the offering that they've already done is slightly bigger, right? So that is why you never trust Finviz. But guess what? If the float is bigger than what Finviz says, wouldn't, as a long, you be a little bit more concerned that it might be a little bit more tough to push this price higher because there is more supply in the market that people are unaware of? And as a short seller, the float is bigger than what people think. So longs are going to try to buy this company up thinking it's going to squeeze, and then it doesn't. It just gives it all up, and the supply comes in. Okay, that's the same thing that happened with AIM. Okay, AIM. This was a small float, small market cap, small company prior to the offering. Okay, prior to the offering, if you search this phrase at the market, prior to the most recent one, okay, prior to the most recent, there is nothing in any 10Q or any 10K, okay, regarding an at-the-market offering. But if you use this phrase, from time to time, okay, those are your two phrases, at-the-market offering or at the market, put them in quotations, and then from time to time, put them in quotations. And you're going to search, and you're going to look at the most recent 10Q or the most recent 424s. Granted, these weren't there prior to today, so you got to worry about those. But before the offering was done, notice this. On November 24th or 27th, they entered an equity distribution agreement between Maxim Group and themselves where they could sell shares. December 31st, 6 months into June 2019, the company sold a respective 49,000 and 2,000 under the 2012 EDA of the proceeds. Pursuant to the prospectus dated January, the company was able to sell 148,000 of its common stock already included, blah, 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 blah. Next part down here. On July 2019, the company entered into another distribution agreement with Maxim to sell shares. Prior thereto, the company, Maxim, terminated the 2012 agreement, and on July 2019, the company filed a prospectus in connection with the offering, which became effective on August 3rd, relating to the sales of offering roughly up to 4.5 million. As of August 2019, August 9th, the company had sold 125,000 under that agreement for a total of 289,000. They got a lot left. On August 5th, 2019, they entered into a note purchase agreement. There's all kinds of purchase agreements here, is my point, okay, in AIM. There is a crap load of dilution available for this company. not only through purchase agreements, but also through shelf registrations over here. So, you did not know about these shelves prior to the runs. These are amendments to the actual shelf, the actual filing of the shelf being here. But what you would do is if you look at the 424 right there, if you look at the filing number, which if you will go to SEC Edgar here, click the file number, you can verify which shelf it came from, okay? Which it came from, the one that was registered on November 6th. So basically, they've just been dumping the living crap out of everything that they could possibly do to raise capital. And this is why longs have to be concerned about things like purchase agreements and at-the-market offerings. Look, warrants, convertible preferred stock, all that other shit, it's hard to know when the company is going to do it because there's more steps to doing it. An at-the-market offering or purchase agreement is the easiest form of dilution for these companies without having to continually without continually having to file more disclosures with the SEC and more prospectuses and all that stuff. The ATMs and purchase agreements, sales agreements, distribution agreements, whatever it is, the easiest ways for the company to raise money. So what do you think they're going to do when it pushes up? Probably going to raise money. Raise it when you can, not when you need to, right? So that is why you put it on radar. So those are your steps, okay? It will go a lot quicker than what I just went through, okay? I'm just going over this in more detail for you. So those are some of the steps that you're going to look for. So now on PRPO, we know that in PRPO, prior to our little catalyst, we know that this particular company did an offering on August 21st with 1.8 million shares, of which they still have roughly 400,000 left. So that's not very many shares left to dump, because remember, volume can overpower an offering. Volume is king. If there is enough volume, the price will drop, but it can recuperate if there is enough demand. Okay, so volume is king. If the volume is not there and there is dilution, don't go long. Dear Lord. Next step, Val uses big charts. You'll go to the chart. First step, look at a 3-month chart. Use the margins on the chart, okay? We don't know anything about these 2 days. If we see it running, the first thing Val does, okay, he uses the margins that are already placed here. So 250, 275, 3, 325, 350. Okay, look. I'm going to do this with some screen stuff here. If we highlight this chart like this, I'm just going to do this so I can draw lines. The first thing we do is, where do our eyes go? 250. There's going to be a lot of resistance in 250. Where's the next level? Right here, 275. Next level, 3. Okay? We're not jumping in here and we're going, okay, that looks like it's about 313. This is roughly 264. Okay, and this here is going to be 317. No. Round the numbers. Don't get too particular with it. Don't make it more difficult on yourself. Keep it simple. 325 becomes another level. 350. Literally almost every quarter point up until you get past 350, and then it becomes 4. Right there, 4, and then you're just probably going to round that off to 450 right there. So 250, 275, 3, 325, 350, 4, 450. Okay? That's all your levels. Now you watch the volume at those levels. Okay? Most of the volume in this particular stock, you can see right here, ranges anywhere between 350, 4, 450. That's where all your volume is. That entire candle right there consists of 350 to 450 range, okay? So that's your most important levels. Those are your most important outer lines. The rest of these are inner lines. Inner lines can work really well for longs, okay? So let's take a look at PRPO. So if we take a look at PRPO on a daily chart here, I've already drawn the lines, 225, 250, 275, 3, 325, 350, 4, and there we go. And then we can round up to 450. I put it here at 440 because the candle at 440, okay? I always round it. I don't put it here at 439 or whatever. I always round these, okay? I'm not going to go in here and look at the wick and be like, okay, 3 line looks closer to more like 304, 305 probably. That's going to be the better area. I'm not doing that, okay? Now, we go back, let's look at a 3-day, 5-minute chart, okay? Let's take a look at day 1. Day 1, what's happening? It comes through the levels. First thing, what does it do? Spike up, hits 250 level, pulls back, breaks through, okay? This is starting to conform. This is starting to respect its own resistance, okay? Now what does it do? Jams right through. Where does it stop? 350. Remember how we talked about 350 being an outer line because of the volume? Remember? 350. On this day right here, we paid attention to the volume down here. The range that happened on that day was between 350 and 450. So we know that all the volume from anybody holding is going to be ranging anywhere between 350 to 450. Now, as a long trader, you can focus on a first bounce area now, right? So once the stock has gone parabolic, you're looking for the pullback. The pullback beginning at support zones, potential support zones. What are the best support zones? Daily chart, right? So it hits 350. You know it respects itself. So you're going to pick an outer line. You're not going to want to hit 350 and all of a sudden start buying 325. That's not enough retracement in order to make a move higher, right? So if this is really going to work, you're going to want to first take an opportunity at 3. So you're going to place some orders at 3, probably stop about 10-15 cents below. You're going to take a loss here, okay? Don't get discouraged. This line is probably going to be a loss, okay? You're cutting that, trying the next line, okay? Next line being 275, and then look what you catch. You catch the ride up, right? You're going to sell some in the resistance area, and then you maybe hold a piece, ride it up a little bit more, set your stop and break even, and just see what can happen with it, okay? This is a hindsight analysis to prove that simple support and resistance using Bow's methods, okay? Remember, the key method is going in here and using the margins that are already given to you on big charts. This is what a lot of people will look at. This is what a lot of people will focus on. It's not about being precise. It's about doing it in a way that others will do it. The mentality of the masses is to round off the number, to make it simple, make it easy to remember. Your first is 250. See all that resistance in there, all that consolidation? It's going to be a lot of support there. Next level, 275. Look at all that resistance there. Look at that consolidation here. That's why it becomes important. Same thing with 3. 3 just so happened to not work. Who cares? We're moving on past that. But you take a loss right here. You reattack at the next line. You give it 2 lines. If 2 lines continue to fail, you stop out at that point. Don't keep adding to a 3rd line because the chart would be very broken if it comes down to 250. Okay, you want it to retrace and hold a high support level, not come all the way back down here. If 275 line broke, say if it broke below like 260, I would probably be done with that. That would be a very broken chart. It's probably not going to bounce. It's not a good long idea. Okay. Appreciate you watching this, guys. I hope this helps you be able to identify the process that we use every single day for analyzing these small caps. Don't overcomplicate it. You perform proper technical analysis. You perform proper technical analysis, you can trade in any kind of market, in any kind of scenario, and you don't need to know that this 5-minute candle breakout right here is a pattern, or that this is a pattern, or that that works. Whatever it is, process is king. Work on your process, guys. Take it easy.